The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service Advanced Technical Analysis course. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
So let's delve into a little more detail then. Of course, we'll break down fundamental analysis, okay? Now again, as discussed, it's the examination of the underlying forces that affect the well-being of the economy, industry group, commodities, or companies. So if we're looking to trade the price of oil, fundamental traders will need to know a lot in terms of the supply and demand function of that market. What are the major importers of that commodity and the major exporters, the major producers, and what standard of oil is derived and produced across the world? How is it priced in terms of the two benchmarks, WTI crude and Brent? Of course, they're the European benchmark. Are there other products? There are indeed. There's a QE, which is the Saudi Arabian form of oil, specific to the Gulf. So you do need to know, how these asset prices move in I suppose as a result of many different underlying factors in that market. And again, the objective is to derive a forecast either from future price movements or long-term delivery from a profit value. So what we'll do is really look into fundamental analysis, and what we'll choose to do, it's effectively the best way to show you how deep you can go with fundamental analysis is to discuss I suppose the objective of investors and how they, as market participants, look to speculate in this market. Well, of course, if you want to become an investor, a question for you: if you're trading an equity, let's choose another example there. We'll use the oil company Total in France. What is the share price? What is the cost, or what is the price of that share at the moment? What is the earnings per share? So of course, as an owner, if I choose to invest in this company and I'm looking for profit potential over the long run, well, I'm giving my hard-earned capital to become a very small percentage owner in this company. I want to earn some of the revenue if they outperform and they make money, given I have invested in them. So what are the earnings per share? What is the market capitalization of this company, and how does it relate to its competitors within its own environment? What are the dividends? Of course, there are payments, usually quarterly payments for investors in terms of how much money, how much revenue each company makes. They pay out dividends per share, of course. Financial growth outlook. So is this a long-term investment? Am I choosing to invest in this stock because I see it growing at an exponential rate of 4% in year one and maybe 12% in year two? If that is attractive to me, of course, I'm looking for long-term value there. And of course, is there sufficient liquidity in trying to trade this equity? Because some equity markets are actually not as liquid as you might think. So to give you one example, we have AIM there in the LSE London Stock Exchange. It is, of course, the fourth largest market after the FTSE 100, 250 and 350. The alternative investment market. So it does have some sort of small to middle size, medium-based enterprises that go to market. They're looking for share investment, but there isn't a serious amount of liquidity. How does that affect your price execution? How does that affect your choice as a trader if you decide to invest in one of those companies? If you decide again to get out of that trade and effectively take profit from something that has arisen, but is there liquidity in actually providing or selling those shares back to the market? So a lot of factors to really take into account when becoming an investor. In terms of this fundamental analysis, let's really delve deep into some of the main focuses, trying to derive how we can find value for these assets. So as the theoretical study of fundamental analysis is focused on value assessment, its applications is much more assertive on particular asset classes, most notably stock markets. There are many practical methods of analysis used in stock valuation. So let's discuss but a few of them. We have income valuation, so otherwise known as discounted cash flow. Price to earnings, of course, the PE ratio. Earnings per share, or EPS. And earnings before income tax, depreciation and amortization, which is EBITDA, of course. Amortization, again, another form of depreciation, just like a mortgage schedule. So EBITDA as well, a very, very common practice, of course, in stock valuation. In terms of income valuation, what we can actually do is look at income flow from future projections for revenue. So what we have here is present value. What is the present value of income flow for a specific company? Well, here we have a figure, of course, of 3,793, but what is, I suppose the question is, how does this relate to the current market capitalization? If I believe the present value of income flows into the company is a certain amount, well, over time, given the time value of money as we define, what is that going to be if I invest in a certain asset over a potential 5-year period or longer? Of course, so it's one method that we can assess to give you an idea to the potential growth or the potential increase in revenue from one particular company or asset over a period of time, given that they are, of course, going to try and expand and outsource potential profit. So again, the question is, how does this relate to the current market capitalization of that company? Well, then we have price to earnings ratio. The PE ratio looks at the relationship between the stock price and the company's earnings. It is a valuation ratio of a company's current share price to its per share earnings. So if you think Facebook there recently delivered something on the context of 26 cent per share. So 26-cent profit on a quarterly expectation there for a share. So you're effectively earning some money there from your shares. It's sometimes also referred to as the earnings multiple, and the PE ratio is the most popular metric of stock analysis, though not the only one. So again, this is attractive for many, many traders, particularly if you may look for sourcing value. So to pick a few stocks or shares, if we choose again Facebook or Google, they're very high earners, which means that they relay this on through their earnings multiple to price earnings ratio. So hypothetically, those traders who seek that value look to take long positions in these equities, look to become partial owners so that they're not necessarily concerned with the fluctuating stock price of this single equity, but they want to see flows of income over time as the company makes revenue each quarter. And obviously they are allowed a derived part of that since their investment has a stake in the company. So effectively, that's how they're looking for value over the long run. What we define as the PE ratio, of course, is market value per share divided by annual earnings per share. Okay. So with this case, then we'll discuss the numerator at the top. Then the market value per share is the current market price of a single share. The annual earnings per share, the denominator, is the net income of a company for the most recent 12 months periods divided by the number of outstanding shares of the company. So that's how we find the PE ratio there. For the market value per share divided by the annual's earnings per share will give us our ratio.